and welcome to Sectors Up Close. I'm Elena Casas. Today we're talking about lithium, and my guest is David Sekera, Chief US Market Strategist at Morningstar. Lithium is essential in the batteries of electric vehicles and many consumer electronics, and that means demand has skyrocketed from 285,000 metric tons in 2019 to 473,000 last year, and is forecast to reach 2.3 million in 2030, mostly driven by the EV market. 70% of it is used in batteries. It's also used in the grids that store power made from wind and solar, leading analysts to say the global market could use 1 million tonnes more lithium annually than can likely be produced. Most is currently extracted from the Atacama Desert in Chile and Argentina, which environmentalists say is damaging the ecosystem. That lack of supply has caused a predictable spike in the price. This is the most traded lithium hydroxide futures contract. It's at $75,000 per metric tonne, up from $31,000 at the start of the year. That should be good news for suppliers, but this is the Global X Lithium and Battery Tech ETF. It's down about 15% year to date, not far off the wider market, as it tracked the downward fall of Tesla. And Goldman Sachs said recently it expects a sharp correction in battery metals. Well, to dig into this, I'm joined now by David Sekera, Chief US Market Strategist at Morningstar. David, hi. What are you expecting to happen with the lithium price going forward? Is it going to remain this high?
Hi, Elena. As you mentioned, the prices certainly have skyrocketed higher over the past 12 to 18 months. But we think at this point, the prices are probably getting near their peak. Now, in our base case, we do think lithium is going to stay high in the near term, averaging about 70,000 per ton over the next year. And then from there, looking forward, we do think that lithium prices are going to stay much higher than their marginal cost of production, because we do think that the market is going to be significantly undersupplied over the next decade. So when we look at the amount of demand out there, we look at the global auto market. Now, last year, only 5% of new autos were either an electric or a hybrid vehicle. And we forecast that by 2030, over 2/3 of new auto production will end up being electrified. Now, as far as the lithium market itself, as you mentioned, there were 473 tons of lithium that were used last year. We expect that usage is going to grow to over 2.3 million tons in 2030. That's about a 20% growth rate over those couple of years. Now, the true demand for lithium, the amount that we think would be used if there was enough supply out there, would actually be about 3.3 million tons. So with the amount of undersupply out there over the next decade, we do think lithium will be very profitable until 2030.
You said there that the lithium market just can't keep up with demand from electric vehicles. Why is that? Where's it coming from, and why is the supply so limited?
Well, the main problem is that it takes anywhere between 6 to 9 years for new greenfield projects from the time that they begin and actually to begin production of the lithium. And even then, after that new project finishes construction, it's going to take a few more years for that project to ramp up to its full potential. So when we look at the new mining projects that are being developed now and when we expect them to come on market, in addition to comparing that to the amount of demand for lithium over the next couple of years, we just think that the amount of demand is going to outpace that supply coming on. And we think that we'll get to 2025 is going to be probably the peak year that we see the most underproduction, and then it should start to leveling out after that.
Okay, so how can investors get exposure to this market? What companies are you interested in here?
Sure. So of the lithium companies that we cover, we rate all of them either 4 or 5 stars. And we use a 5-star scale in which a 5-star stock is the ones that we think are the most undervalued. So first I would mention would be Lithium Americas, and that's going to be the most undervalued stock that we cover in the lithium space. In fact, we think that stock could actually triple up to $65 a share. Now, I would note that it is a very risky situation. The company is still in its startup phase, and it hasn't yet begun production. In addition, there are several environmental groups that have sued the government in order to appeal the company's project permit. Now, our analyst team has reviewed comparable projects in the U.S. in the past, and based on that analysis, we're pretty sure that the courts will rule in favor of that permit, and that could actually begin as soon as the second half of this year. Now, for investors looking for less risky situations, first I'd recommend taking a look at Albemarle. So that one's rated 4 stars, and we assigned a fair value of $320 per share. That's actually one of our top picks, as we think the company, produces lithium from two of the best lithium resources in the world.
Can I dig a little bit into what you were saying there about Lithium Americas, who, as I understand, want to be the first producer of lithium in the US at a place called Thacker Pass in Nevada, and they are, as you were saying there, facing legal action from environmental groups. What exactly is going on there? What's the objection, and why are you confident that it's likely to go ahead?
Well, as I mentioned, they are suing the Bureau of Land Management because they do think that there would be a lot of environmental impacts that aren't being currently, worked out through the project plan at this point in time. But our analyst team, they've gone back and they've looked at all the mining projects over the past couple decades in the U.S. and looked at those permits and what those permits required in order to be, passed through. And we do think that the courts will end up ruling, in favor of that permit going forward.
If lithium prices stay pretty high, as you're saying they will, is that likely to have an effect on demand in the sense that it will keep the prices of electric vehicles high and prevent them from selling as many as you're forecasting now?
Yeah, we don't think that the prices are going to actually impact demand all that much. I mean, we do think that we're in the early innings of a long-term structural shift, as far as, the auto market shifting to electric and hybrid vehicles from internal combustion engines. And so when we look at, the cost of lithium and we think about that as a percentage of the overall price of an electric vehicle, according to our analysis, for every $8,000 increase in the price per ton of lithium, that only ends up increasing the cost of the electric vehicle by about 1%.
Thanks so much for that, David Sekera, Chief US Market Strategist at Morningstar. Well, before I go, here are some of the other stories we're following in this space. In India, Tata Motors aims to sell about 50,000 electric vehicles this fiscal year and double that by 2024. Electrification is the cornerstone of Prime Minister Narendra Modi's climate change policy and is seen as crucial to reduce chronic problems with pollution. A court in the Democratic Republic of the Congo has ordered exports to stop from the world's second largest cobalt mine, another key component of EV batteries. The mine is majority owned by Chinese firm COMEX, which is in a legal dispute with the Congolese state over royalties. And the Bank of England has launched a review into trading on the London Metals Exchange, saying it's concerned commodity markets are too opaque. It cited the surge in nickel prices after major producer Russia invaded Ukraine. A large part of metals market activity is traded over the counter or privately, making it hard to regulate. And that's your roundup of the lithium sector. I'm Elena Casas, and this is Reuters.